Hello, I am Mani Malarvanan. In this video, we will look into the future of stable coins and also we'll discuss about the regulatory landscape of stable coin across the world. We can discuss about how the stablecoin regulatory frameworks are going to work in Europe and Asia. And then we can compare and contrast between the US regulatory framework that was passed recently. If you need in-depth coverage of what exactly stablecoin or what are all the different elements of Genius Act that was passed in the US, please go and watch our previous videos. And also I'll provide the link in this video so that you can go and listen those videos. In this presentation, we'll talk about the introduction, the definition of the stable coin, and then we'll talk about the regulatory landscape across the globe. And then we'll discuss about the mainstream adoption of this stable coin and how the legal frameworks are going to work in each country, and then the how global transactions are going to happen if anybody wants to send money through stablecoin across the globe. And then at the end, we'll talk about the future outlook and challenges that are going to be there for the stablecoin industry and what exactly the industry needs to do to move forward so that there will be more people coming and using the stablecoin. So what are stablecoin? Stablecoin is basically a digital representation of a fiat currency. For US dollar, it will be a US based stable coin. And for euro, it will be euro based stable coin. If somebody is going to create, say, 50 stable coin, either euro or US or any other currency, then they need to have 10 currencies that the stable coin represents. For example, if somebody is going to mint 10 stable coins, US based stable coin, then they need to have a $10 in their reserve so that they can able to legally mint the stable coin. So that is the fiat based stable coin. And then the crypto based stable coin, then it is going to adapt the crypto, whether it could be Ethereum or Solana or Binance, any type of crypto, then the stable coin is based on that crypto based crypto assets that are being used. So those are all crypto based stable coin. And then for algorithmic stable coin, it is not completely defined what exactly, how exactly it is working. There are companies still working on to create it. It is not based on crypto or fiat based. It is based on the algorithmic design they have it within the blockchain. Based on that, the number of stable coin goes up or goes down. So based on the legal framework US created a couple of weeks back, the Genius Act, only the fiat based stable coins are going to be valid. If it is a stable coin based on crypto or algorithmic, then it is not valid. Maybe that may change in the future, but for now, only fiat based stable coin are going to be valid. So for the regulatory landscape, United States created a Genius Act, and then the European Union created a MiCA mandate that that has the legal structure for the stablecoin creators and for the consumers. And then in Asia, in South Korea, they have created a sandbox approach where the companies, those who want to do a research-based approach, they can create a stable coin within a sandbox to test their concepts before they can get into the consumers. And in Hong Kong, there is a legal frameworks are being created and people are working on to create it. Other than these two countries, many other countries are still engaging and trying to create it. Since the US passed the law recently, I'm sure other world governments will start creating a stable coin framework to represent their digital currency. So, and also there is a global coordination task force are created. How each country can work together to exchange stable coin. when anybody wants to send a stable coin between their border. So the countries in the G20, they are creating a harmonized standards so that any stable coin can be securely transferred, and also there are transparency rules are being created for entities those who are going to mint stable coins to follow that, so that the consumers are safeguarded during the transaction. At the end of the day, if somebody has a stable coin, say 50, 100 stable coin, that needs to be protected. So all the laws are created to safeguard that. And also in G20 world, there is a discussion going on, and there are frameworks created to avoid money laundering type situations that can occur when the stable coins are in use. There are legal frameworks exist for fiat currency. Similarly, the G20 and other standards they are creating so that the money laundering is not going to happen within the stable coin network. And IMF is also coming up with a global standards for all the stablecoin issuers needs to follow. And they are going to enforce it, and they are working on creating the guidelines so that there will be set of rules and regulations will be created for all the stablecoin entities to follow when they are going to use their network to transfer stablecoin between countries. And similarly, their rules are getting created, FSB and BIS type of framework, so that all the assets that are being created within the stablecoin are all protected, and it is being following proper guidelines in the issuance of the stablecoin. In the mainstream adoption, there are quite a few industries are getting into the stablecoin industry. For example, last year, if you see the total number of transactions that happened in the stablecoin, that outperformed both Visa and MasterCard, those two largest credit card industries in the world. So the stablecoin is touching close to 27 trillion US dollars in the transactions. Most of these transactions happened consumers purchasing goods in crypto blockchain networks. See, they are not using this in a day-to-day transaction, for example, buying a coffee or buying their groceries. It will happen soon, but last year or this year is also it's going to be used within their crypto framework. If somebody is buying a Bitcoin or Solana or Ethereum, then the stable coins are used for the transactions. So bulk of the transaction, almost all the transaction came through this type of transactions. But now there is a legal framework is created. There will be more regular people will be using stablecoin for their day-to-day transactions. Instead of using a Visa or MasterCard, in the future, you can use a stablecoin for your transaction. So if you want to buy a coffee, you can use a stablecoin. If you want to buy your grocery, you can use stablecoin. So that type of adoption is going to happen because there is a legal frameworks are being created in US, and other countries will also fall probably in the next 2 3 years. There will be more legal frameworks will be created across the countries, and there will be more legalized frameworks will be created how to exchange cryptocurrencies between cross borders. And then another important aspect is going to happen in the stablecoin industry is integration with the traditional financial systems. For example, the big companies are already getting into stablecoin landscape. If I am trying to purchase any products or services through Amazon, now I am using my credit card to do that. But in the real future, you can use a stable coin. Amazon will start issuing its own stable coin by following US regulations, the Genius Act. Walmart, I'm sure they will also do it. Many large corporations, they will have their own stable coin, and people can use the stable coin for their day-to-day transactions. So the big tech companies are coming into the stablecoin industry. And also the traditional financing industries like a Visa, MasterCard, and banks, they are also coming into the stablecoin industry so that they can issue stablecoin, they can mint stablecoin, then they can make the user to pay through that. For example, Google can have its own stablecoin, and anybody is purchasing ad network through Google services, they can use stablecoin for their transactions. Similarly, Apple, Airbnb, all the big tech companies will get into the stablecoin sooner than later so that people can able to use the stablecoin for the regular transactions. And right now, if you see, the adoption of stablecoin is going to grow drastically again because of US government recently passed, and now it's became a law. It was passed in both the Senate and Congress, and now it's a law. It's signed by the president of US, and it became a law in US. Since it is successfully passed in US, then other countries will also follow, and they will also create a legal framework for the stable coin for their own currency, so that there will be more and more users will be getting into the stable coin for that transaction, for purchasing goods and services on everyday life. There are risks and challenges still exist. See, the Genesis Act that is created in US, that is only preliminary, and the issuers, those who are going to create stablecoin, they have 3 4 years to completely follow the rules and regulations so that they can change their network and say they can adapt to the legal framework that was created. And also the legal framework they created, it is only high level. In the next couple of years, there will be changes how it's going to be implemented. See, the legal framework right now says certain high level rules and regulations for the issuer, for the consumers. So that's all it says. It doesn't say what exactly each issuer needs to implement. So that's what the industry and the Congress, the US Congress is going to work to create a detailed implementation plan so that all the issuers can follow the implementation plan. So during that time, it is in a gray area. What is considered legal, what is considered not legal. So from the consumer's point of view, you need to understand that what exactly the stable coin you are buying, what are all the pros and cons before making the decision. So that part is still working on. And another important concern that many people raised in the stable coin is the growing share of illicit transaction that can happen within the country and within the cross border. So, for example, once they made a digitalized dollar, then it would be easy for anybody to send money to any bad persons without having a central authority monitoring the money transactions. So that would create a lot of problems for a lot of governments to monitor what exactly is happening in the stablecoin industry. So there is a technology framework needs to be created so that the money laundering or illicit transactions can be avoided. It is still happening in the fiat currency. For example, if you want to take $100,000 from US to any country, you can hide in your baggage and send it, even though the customs and everything they check it. It is still possible to do that. Similarly, in the stablecoin network, through the infrastructure, through the computer, you can able to send money. But that's what the industry and the technical companies are working to avoid it. If not completely avoiding it, they can make it difficult for bad actors to do the transaction through the stablecoin networks. So all those regulatory changes are happening based on the technology services that are being created, and that will be provided in the legal framework so that any issuer can follow that and they can understand how exactly their stablecoin is protected. And the reserve risk. This is another concern they talked about. See, for example, any stable coin to maintain issuer, they need to maintain the similar amount of stable coins in the reserve away from their operational expenses. For example, if I am going to produce a 1 million stable coin, then I need to have a $1 million in my bank account, and I can't touch it. It should be managed separately without my day-to-day operational expenses. So that the 1 million stable coin I'm going to mint, that can be in the circulation and that can be used to produce revenue for the transactions. And I should always have the $1 million until I have the 1 million stable coin. If I don't have the 1 million stable coin, then I'm not following the Genius Act that is created into law recently. But there are times, there will be days or weeks before anybody can find out whether I have 1 million in my reserve, or I'll have the equal amount of stable coin in my network. Sometimes I may mint 1,000 more, but it may take a couple of weeks for me to have $1,000 more in my reserve to maintain the one-to-one pegging. So all those risks needs to be figured out, and technically it needs to be implemented so that the consumers are protected at the end. And then in the conclusion, the stable coins are evolving. It has been there for the last 4 or 5 years, but now it is being passed as a legal framework within US. So adoption is going to increase drastically because there are a lot of movement going on. Many companies, tech companies, both in US and in other countries, are trying to come up with their own stable coin by following the legal framework. So once it's been popularly adopted and once it's been created with a proper legal framework, more consumers will start using it in their day-to-day operation. And also it is going to be adopted by the small and medium-sized businesses. See, again, the big companies may come up with their own infrastructure and own stable coin for their internal transactions, but the small businesses can also work with the big businesses and try to come up with a stable coin structure for their transactions. They can use big companies transaction, or they can also mint their own transaction by using the larger frameworks. It is like big banks, the federal banks, and then the national banks, and then the city banks concept. So the city banks can have their own accounts. They can have their own customers using their account for day-to-day transactions. Like that, small businesses will also get into the stablecoin industry, and they can mint their own stable coins. So ultimately, in the future, there will be more traction in the stable coin. That's because of the legal framework that was passed recently in US. I keep telling this because there are many companies are working within US to create a robust stablecoin marketplace for everybody to participate. So the adoption will grow drastically in the next couple of years. Look out for this space. And if you need any specific information about a particular framework, specifically US based Genesis Act, we have a videos. You can look into it. And if you have any questions, please let us know. We'll be happy to help you. And thanks for taking time to listen to this presentation. If you have any questions or concerns, please let us know. And if you want to manage Ethereum based stablecoin, you can go to our platform dpa.analytic.com, and you can view various graphs of the stablecoin that is available in Ethereum. So we are working on other blockchain platforms, but right now our platform supports the Ethereum based stablecoins. You can get more informations about our product, our services if you go to analytic.com. And please help us to grow this channel by subscribing to this video and sending it to your friends and family. Thank you. Bye.